Yesterday in a broadcast, IMF Managing Director Kristalina Georgieva said that emerging markets had to invest in digital infrastructure in order to create jobs and lift their countries out of poverty. Fintech companies have a lot of this responsibility. And so here in Nigeria, or rather global consulting firm McKinsey Company has released a new report, Harnessing Nigeria's Fintech Potential. And joining me to talk about how Nigeria can harness her fintech potential is Mayowa Kuyoro, who is Associate Principal, McKinsey Company. Good morning to you, Mayowa. Thank you so much for joining us. Your report states that in the past 3 years, fintech investments in Nigeria grew by 197%, with majority of the investment coming from outside the country. Is that a good thing? Is that encouraging? Can we see local investments sometime or in the future becoming that majority?
Good morning. Thank you very much for having me on your show. In terms of investment, I think it's a good thing that the investment is growing, regardless of where it comes from. It's foreign direct investment, which is good for sort of Nigeria's long-term growth. So as long as the industry continues to get the capital it needs to develop, I think it's in a good space. So whether or not it's local or foreign investment coming into Nigeria, I think any investment into the fintech industry is something that bodes well for the industry.
Great. You also noted in your report that most fintechs have targeted early adopters, individuals who are already making use of banking and other financial services and are willing to try out new ones. You also stated they've not had the capacity or appetite to introduce new customers to the banking system. So with respect to appetite, why do you think that is?
Look, I think we're all rational actors, and so it's difficult to get people, especially at the bottom of the pyramid, into the financial system. Historically, it's been a very, very high cost enterprise. And there are a couple of reasons why I wouldn't go into now why that's been the case. So as a rational actor, I would target those where I can guarantee that I will get a return for my investment. So until we have the enabling factors to encourage investments at the bottom of the pyramid, which include regulation, infrastructure, stakeholder cooperation, there is little incentive for private capital to go into what could end up being a high cost or high cash burn business. One caveat I must give, however, is that there are some fintechs that are targeting the financial excluded, but they're not the majority.
Okay, so just to follow up, that means we're talking about that responsibility then lies with governments around the world, like this in Nigeria or emerging markets, to be able to create that environment that will then entice that investment to want to now increase their appetite for what you stated.
So I don't think it's only governments that have a responsibility. I think they have a majority of a responsibility. So things like, the supporting infrastructure, such as road, telecoms, and so on and so forth. I think this has to be a concerted effort by all stakeholders. So, for example, if you're an investor that is investing in a fintech that is targeting the bottom of the pyramid, you have to have patient capital and not necessarily be demanding the same rates of return or at the pace that you would typically get from what I would call sort of a more fully fleshed out fintech. So I think everybody has a role to play in getting to the financially excluded in Nigeria.
Okay, thank you for that. So your report, you identified 1, a youthful population, 2, increasing smartphone penetration, and 3, a focused regulatory drive to increase financial inclusion and cashless payments as a successful combination to create the perfect recipe for a thriving fintech sector. If you had to pick one of the 3 as most important, hard question, but which would it be?
So that's actually a very difficult question because I don't think there is one silver bullet that's led to the growth of the sector. I think the fact that we are a young population, average age across Africa is around 19. The fact that the smartphone was there, you could probably maybe infer that given some of these trends that our regulators were seeing, they decided to sort of create the enabling regulation to get it done. So I don't think that there is one singular factor, because I don't think without any one of these, we would have seen the growth that we've seen in the industry today. But I think these have all come together to create, like you said, that perfect storm that's led to the abundance of activity that we've seen in the space in the last few years.
All right, great stuff. Okay, so your report highlighted the difficulty of SMEs to receive loans. I believe you said that SME owners in the meantime have to contend with limited access to financing and value-added services. Loans offered by banks typically come with steep interest rates, lengthy application process, and collateral and guarantor requirements that SMEs and micro enterprises find difficult to fulfill. And that's hampering the process of accessing loans. How do you think the lending environment can become easier for these SMEs to access these loans?
I think that's a really good question. On the affordability point, I hate to say this, but affordability is relative. As a lender, I have to price in my cost of funding, I have to price in my cost of risk, my cost of operations, and then, get enough money to turn some profits. And there are some structural reasons why the cost of lending is currently high today, including things such as identification, our inflation rate, and. I think these structural reasons have to be addressed in order to get the cost of lending down. But on the flip side to that, there are some things that individual actors within the system can also do. So we're seeing increasingly that people are using what I would term as alternative data to score to make credit decisions. So people are able to, institutions that lend are able to figure out a way to assess risk without using your traditional credit bureau data to the bottom of the pyramid. We're seeing increasingly number of people who are getting onto some sort of identification system with BVN and so on and so forth. So slowly and surely, we're getting some progress towards penetrating lending in the SME space, but I think we still have quite a way to go.
All right, quite a way to go. Now, we just put up your Fintech Grid. I don't know if you can walk us through what we're just looking at with that grid. How does that work? Are we talking about adoption here, or what are we looking at with this grid?
So essentially, this grid, we have a database where we track all the sort of fintechs. It's actually a global database, and we, as part of this effort, built one for Nigeria, and we sort of look at what is the type of activity that fintechs are in and who are the customer segments they're targeted to. So on the vertical axis, you see the customer segment, and on the horizontal axis, you see the products or capabilities or sort of what is the focus area of the fintech. And I think the overall message when you look at it is, first of all, fintechs in Nigeria are mostly focused on the consumer space. Around 50% of the fintechs that we have in our database are focused on consumer, and that's sort of the darker shaded elements. And then on the product side, you see that there are three predominant types of fintech: so savings and investments, lending, as well as payments.
Thank you so much for that. So you mentioned fintech adoption being highest in Lagos and among middle class and affluent customers. What are the drivers behind that, and what about the other states in the country? How did they catch up?
Thank you. Look, that goes back to the original question we asked. We spoke about earlier on around the penetration of fintech activity. It actually tracks very well with how you would see sort of traditional financial services looking like in Nigeria today. A couple of things that can help with penetration is one, creating a pool and demand for financial services. For example, we saw in India where government benefits were tied to a digital system, the adoption sort of skyrocketed in a very short period of time. There's also ensuring that we've talked about it before, that the backbone infrastructure works so that people don't have access issues, because there's nothing worse than trying to use an app or trying to use, USSD, trying to use something on your phone and you can't because there's no network. So ensuring that those things work. And then I think a final and very important thing, and this is not only for fintechs, but also financial services adoption, is that education is going to be key.
Okay, thank you so much for that. Okay, so also your report stated that quick and decisive action will allow stakeholders to realize Nigeria's fintech potential. But what? I mean, we've touched on a couple of these, but are there any other actions that are key to making this happen?
We talk about these actions across a number of stakeholders, so including the investors, the incumbents, government, donors, and so on. I'll focus on investors, the fintechs for the purposes of this conversation, because I really do believe that there is a huge potential here. I think the first thing I would say is thinking about extending your runway and pivoting your business model. Nigeria expects to see a contraction. I think it was in the news yesterday where the country is experiencing a recession or is expecting to see a recession of about 4%. So if you believe that financial services is very much tied to the state of the economy, you'll agree that it's going to be a difficult time for people in financial services space, at least in the short term. So making sure that you find ways to stretch your funding and making sure that it goes further will be key. And then secondly, and we saw some of this happening at the beginning of the crisis, is pivoting quickly if your current business model is under threat as a result of the crisis. And then the third thing I would actually add is that, forge smart alliances. In Europe, the US, we are seeing a wave of M&A activities with banks and other fintech players. So the question I would ask if I was a fintech operator in this market is, where does 1 + 1 = 11? Like, who are the partners I can partner with to make sure that I am really, really harnessing the potential that my industry has in this space?
Thank you for that. And I'm glad you mentioned the banks, because also your report said that you gave some advice for the banks. You said for banks to remain appealing and competitive in a shifting landscape, they need to transform into agile and customer-centric organizations by embracing technology. There's actually, Bloomberg has an article today talking about how banks are trying to bulk up to withstand the threat of fintech. So how can they achieve what you stated there?
Yeah, I think I read that article this morning as well. Look, I think it depends on your definition of quickly. I think there's no overnight success. I think it is important as banks are thinking about, how do I reimagine, how do I reinvent myself, given all that's happened in the industry recently, that you are putting the customer at the very, very core of what you're doing and core of the decisions you're making as an institution, and you're doing it rapidly. Like the world is changing very, very quickly. It is possible. We've seen examples both here locally and abroad with banks who have undergone these transformations. And I think they say never waste a good crisis. I think this is really the time for our institutions to take a step back and say, how would we reinvent and how would we reshape the way we approach this industry?
Great stuff. You also talked about providers of capital, private equity firms, venture capital for companies, angel investors having a key role to play in unlocking the potential for fintech in Nigeria. What are those elements that they can consider? Yeah.
In the report, we talk about three things. We talk about recalibrating the investment thesis in this space. It is not enough to just fund and expect growth and financial engineering will create value. That's kind of how it works outside of our markets. There's sometimes a need for a hands-on approach. And if you follow this industry pretty closely, you will see that there's been some of that happening in the last month or so. So you really need to have a hands-on approach with your investments to make sure that you can really create the value you want to see. The second thing we talk about is looking beyond startups. There are some innovative firms who've been around for a while in this space. And so investors may want to explore the broader landscape rather than just startups in the financial technology space. And then finally, again, given the way our market is, given the fact that, yes, we have over 200, 250 players, it's all relatively small. Everybody knows everybody, right? So potentially playing that bridge role between fintechs and more established players to form this JVs and the alliances I spoke about earlier on.
Thank you so much. Mayowa Kuyoro, Associate Principal, McKinsey Company. Thank you so much for taking to your report on how to harness fintech potential in Nigeria. We appreciate your insights. Thank you so much.